Welcome to this explainer on why your credit score matters more than your savings. Today, we're uncovering a pretty wild financial reality. We're going to see why a hidden three-digit number actually holds way more power over your life than the cold, hard cash sitting in your bank account. So imagine this for a second. You've worked incredibly hard, right? You've got thousands of dollars saved up, and you feel, well, completely secure. But then you step out into the real world to make a move, and boom, you hit a brick wall. All that cash, it just isn't enough to open the doors you thought it would.
Picture applying for a new apartment. You've got the security deposit ready to go in your checking account, plus the first month's rent. But you're instantly denied. The leasing office literally looks right past your cash and just tells you no. It's kind of ironic, honestly. You're sitting on a mountain of cash, but you can't even get the keys to a basic studio apartment.
Or consider this scenario. You head down to the local dealership to buy a car, just to get to work. Again, you have a really solid down payment saved up. But you sit down at that financing desk and your loan application gets completely rejected. Even with the cash literally in hand, the system just says, nope, you aren't qualified.
As financial educator, Coach Kobo illustrates for us in this explainer, the unseen force holding you back in these situations is your credit score. That single metric essentially controls your freedom. And the crazy part? It can quietly damage your life for years over just one seemingly insignificant mistake.
What exactly is a credit score? To understand why all this happens, we really need to strip things back to the basics. What actually is a credit score in our modern economy? I mean, we hear the term literally all the time, but how does the system truly define it?
Think of it like a financial reputation score. It basically exists to answer one absolutely vital question for massive banking institutions. Can this person be trusted with borrowed money? It's a strict, numerical representation of your trustworthiness in the eyes of the entire financial system.
In America, this score isn't just a quick snapshot of where you are today. It's more like a documentary of your financial habits. It constantly tracks if you're paying your bills on time, what your overall debt levels look like, the length of your credit history, and just your general responsible management of money over time.
Why does this one number shape so much of your financial life? Knowing what it is, we have to ask ourselves, why does this one specific number carry so much weight? Why does it somehow mean more than the actual physical dollars in your pocket when you walk into a bank or a leasing office?
Well, a strong score acts quite literally like a skeleton key for the modern economy. It effortlessly unlocks doors for buying homes, financing cars, renting apartments, and this is huge, qualifying for much lower interest rates. Basically, the higher your score, the safer banks believe you are, and the more financial freedom you end up having.
Now, the real, tangible cost of a bad score is absolutely staggering. Just look at this comparison. Two people can walk into the exact same dealership on the exact same day to buy the exact same car. But their financial experiences, they're going to be vastly different.
Because of their financial reputation, the person with the lower credit score is going to quietly end up paying thousands of dollars more in interest for that very same vehicle. It's essentially an invisible tax on bad credit. It makes absolutely everything in life way more expensive, and it slowly drains your wealth over time.
How do people slowly destroy their financial reputation? Knowing how incredibly expensive bad credit is, you've got to wonder, how do people actually end up damaging their scores? What are the specific behaviors that trigger this massive financial penalty?
Our source material points out that, most people don't destroy their scores overnight. It's much more of a slow burn. Things like missing payments, maxing out your credit cards, taking on way too much debt, or just ignoring bills entirely. These all send massive, glaring warning signals directly to lenders.
And the system has an incredibly long memory. Just one single missed payment can haunt you for years, long after you've even forgotten what you bought in the first place. That's exactly why financial discipline on the small things matters so intensely.
Why are banks so obsessed with this specific number? Let's pull back the curtain for a second here. Why are massive banking institutions constantly checking this one number before they agree to help you? Why are they so deeply obsessed with this specific metric over literally everything else about you? It all comes down to a single, constant question every bank asks when reviewing your application. Will we get our money back? At the end of the day, that is their absolute only true concern.
To answer that question, they use your credit score to measure risk. They operate under a very strict assumption, which is that people with lower scores are inherently riskier borrowers. It's just a cold, mathematical way for them to gauge exactly how much danger their money is in if they decide to hand it over to you.
When banks identify that risk, they fiercely protect themselves. They respond by slapping you with higher interest rates, annoying administrative fees, or, just rejecting you entirely to insulate themselves from your past mistakes.
Why do people with very little savings sometimes get approved faster than people with cash? Here is where things become really, really unfair. This is the exact paradox that completely baffles most people when they first interact with the banking system.
That paradox exists because modern financial systems don't actually reward having cash on hand. They reward predictability. They want to know exactly what you're going to do month after month, year after year.
This means, surprisingly enough, someone with modest savings but excellent credit will actually receive much better financial treatment than someone who has lots of cash but a poor credit history. The person with less money but better habits wins the game every single time.
Banks want borrowers who consistently follow financial agreements. Reliable behavior patterns matter way more to lenders than a static bank balance. Cash just proves you have money today. A great credit score proves you can be trusted with their money tomorrow.
Which brings us to the bigger lesson of our source material today. Whether we like it or not, your credit score is the tether connecting your everyday financial freedom, your costs, and your opportunities to these massive unseen systems. You simply cannot ignore it.
Do credit scores give people fair opportunities or just make life harder financially? As we wrap up this explainer, I want to leave you with a provocative thought. Does this highly predictable, strict system actually create fair opportunities for everyone to prove their trustworthiness? Or does it simply trap people who make one small mistake? It's a fascinating debate, but understanding the rules is definitely the first step to making sure the system works for you. Thanks for joining me.